Glow Warriors NFP Day, which means no frickin' problem. Okay. You know why? Because we have the dream team here. Okay. And what I'd like everyone to do is I'd like the team to show their face so you guys can know what's behind all the great actionable ideas and see what people look like.
No one
So,
knows who I look like.
yeah, you're not really that covert. I've seen your mug. You flash your mug with your hand under your chin. You pose everything. You're not undercover anymore. Let's see your face. Come on. There we go. How about you, Ryan? Okay, man.
Oh, I haven't done my hair, Dale.
You, yeah, your hair is done with you, so you don't have to do your hair. Ryan, K, man. Let's see it. I wish Grega was here too. Okay, there's Ryan. Your hair looks great, man. Well, I don't know what you're talking about. Your hair looks great. K-Man's not going to K-Man's not going to cooperate.
Oh, now I've lost my screen. Hang
Oh,
on.
All
I was
right.
there. Sorry.
Oh, he showed it.
There,
Yeah,
he,
there he
there.
is.
Hey, I
All right,
was
there
there
he is.
already.
All right, ladies and gentlemen, I give you the dream team. Okay,
See what I'm
so
missing.
here we are. We're hardworking guys just like you, giving the store away every day, right?
And Dale, let's make sure we remind everybody that it was just the 5 o'clock hour for you and I here.
Yeah,
So
yeah. So
you're actually in the 4 o'clock hour.
yeah,
We're getting strong. Here we go.
we're pretty dedicated.
Blake,
So I mean, today's all about employment. So I thought I'd do just a little bit of a Springsteen song. So he wrote this. Employment used to be, I guess you could say we're still in a factory. It's much nicer. We don't work like our grandparents and our great grandparents, or for me, uh, my children. No, for me, it would just be parents and grandparents that had to work, in what President-elect Trump wants to have manufacturing here again. A lot of people worked at factories, so Springsteen wrote about it, and it goes like this. Early in the morning, factory whistle blows. Man rises up and puts on his clothes. Man walks out with his lunch into the morning light. The work, just a work in life. Oh, it's the work, just a work in life.
Very
Forgive
nice.
the working life. So we do it. Okay, we do it for of course, to have a successful enterprise. And our successful enterprise is based upon people wanting to be successful, which, 80, 90% aren't. So, if you're in that 20%, we still want you to help people that are in that 80% because that's what happens in the community. We help each other grow. So nice
You
seeing
got me
everybody.
inspired, Dale. I've
Let's
put my old trading coat on.
all right, yeah, beautiful. God, it
Let's
brings
go.
me back. They don't have floors anymore, Ryan.
No.
So we created our own floor in the community. It's just like pit traders sharing ideas. Let me tell you something.
Cards.
Most pit traders did not know how to trade. And
Yep.
that's why when it went to the internet and they didn't have the paper, they couldn't make the transition because you didn't have to be right to be a pit trader. You just
Yep.
traded the edge, right? So a lot of
Yep.
these guys, they went by the wayside. So you're also looking at guys that made, like maybe 20% made the transition to being, running a hedge fund, but you had to learn how to be right. And God, I always started off that way. As a runner, I was charting with my commodity perspective and trying to predict silver prices off the charts. So, uh, always be looking at charts.
That,
That's
that's
your art.
that, That's exactly what put me here today, mate. I saw that exactly that. You could trade and make plenty of money on the floor without actually knowing how to trade. And I was like, well, hang on, I want to know how to trade. And you have to learn that. And
you accomplished it. You know, how long do you think? And someone was talking to me on X today. He's in his 4th year of trading. He still has frustrations, but most people I've interviewed, they come up with about a 4-year time frame before they felt confident that they were going to be pulling money out of the market. How many years? I mean, it took me 40.
I can tell you in my experience working with retail traders, I would say average is between 1 to 4 years. I think is a pretty standard, and some people are a little bit early in the curve, and some are a little bit later. And that's having experience working with retail traders since 2002. So you're talking 22 years of really seeing newbies come through. It depends on their learning curve and their understanding of how markets operate. But it's kind of like the same thing as like, I understand math, and I'm not a very good writer. It's different parts of my brain work differently. So I think that's going to be the same way for most people. Sorry, I didn't mean to jump in, but
no, that's great.
Throw that in there.
So Blake believes it could be done in a year.
No,
I'm just telling you what the average is. There's always
Sure,
exceptions to the rule. Some people, you know what? It may take even longer. Okay. It doesn't mean you give it up after 4 years, after all the work you've put through, and you're not, number one in a trading contest, because that's hard work you would just be throwing away. So anyway, find a way to embellish. That's what we try and do, is embellish our lives with things that have value. So if trading has value to you, you can't be lazy. You have to put in the time and end up looking old like me. I'm sorry to report. That's what's going to happen to even all my young comrades here. They're going to get old, but that's great. That means that you made it.
No one escapes time.
Yeah.
And it's not just getting to a level; it's staying at a level. You can learn for 4 years. You've got to carry that on and on and on and on and on. So you never stop learning. Even now, 35, nearly 40 years, never stop learning.
Yeah, and I think Cayman, you just said it in the chat room, literally like, I don't know, 15 minutes ago. I'm a rookie for rookie. What did you say?
I say in trading we are a rookie for life.
Yes.
Wow.
Yes.
I love that.
That's true.
Because I still make rookie mistakes.
We all do.
Even though I know, and I teach, and I do what I say, not what I do sometimes. I'll say, "What are you doing, Dale?" I mean, you would never tell anyone to do this.
You know what it is? You know what it is, Coach, is when I really try to focus, especially as you've been trading for so many years, I really try to focus on when I make those mistakes, why I made them, because when it's fresh in my mind, I tend not to make those mistakes very often. Or it might be 6-month gap or maybe a year gap before I'm like, oh, what was I doing chasing? FOMO is not in my in the way, my repertoire of what I do. So when I really slap myself for that, I find myself doing it less and less over time, but it doesn't mean that I don't still fall in the trap. We all do.
It's your default position, because as traders, we have to relearn how normal reactions to how most people would behave.
Sure.
I mean, get out when things are sell everything when everyone's selling everything, but you have to learn that might be an opportunity. So anyway, great to see all you guys. I mean, we hardly get to see each other, and
we don't.
so I wanted to do this
sometimes for the better.
Yeah. Next time you got to give us some warning, so I'm not wearing my pajama shirt.
All right. Well, we'll even have a rehearsal. Anyway,
we've all got faces for radio.
All right. So let's Blake, I want to mention
Yeah.
And Blake is someone you can learn from. Yesterday, Blake showed the Bitcoin chart at a fib extension when it was over 4 grand higher on the day. If you watch the action yesterday, Bitcoin went from 4 grand higher to, I don't know, about 5 grand lower before it bounced. It was a huge trade, a huge trade. You know, what it does from now, whether it's a top or not, it may not be, but God, what a scalp and what a
Well, you
range.
know, I wish I would have traded it, Dale, but if you've been listening here for the last few months, we've talked about the big 161% extension.
Yeah.
It was
Right there.
you know, yeah, I mean, it was to us, it was very obvious because we've been looking at it for months, and it's like, well, finally it reached 103,000. It's a cup and handle. It was a cup and handle target
Yeah, right.
that we've been looking at forever. All you have to do is measure the bottom of the cup to the bottom of the handle. That took us to 103,000. You had the 161% extension right there. And, you know, I was just on the trade-off show with Pepperstone and Chris Weston, and he's like, you know, what do you think about this 100,000 level as we were approaching it? And I'm like, 103,000 is where we're targeting, and we hit it. Now it doesn't mean it's going to stop
Doesn't it
there.
still amaze you, Blake?
The technical
Especially
analysis, still,
like
yeah.
Bitcoin, you know, which is so wild and reflexive that it would respect that fib number like that.
It doesn't to me in cryptos. And one of the things I love about crypto as a trading product is that there's not enough machines in the system right now that anticipate this type of stuff. So this is raw human emotion is what you're seeing in crypto, and that's what powers Fibonacci's. I mean, it just as in a nutshell. I mean, everything that we have in nature and we look at from our palms of our hands to a palm tree has Fibonacci ratios inside of it, and so that's hardwired into human emotion. And like I said, there's not enough machines and algorithms trading around those numbers in cryptos as they are in every other market. So I think that's why cryptos trade so technically. Yeah, they're so it's so raw and good right now. It's probably like if you looked at you know, FX markets in the early 2000s. Bitcoin trades a lot like that. I mean, now you have to, if you're trading FX, you got to be a little bit more anticipatory and thinking about, you know, flows and sentiment and, you know, positioning and macro. And, you know, with Bitcoin or you know, Cardano or whatever, it's just raw human emotion. I love it.
So. You know, a lot of people feel that way. They call it the most reflexive market out there.
Yeah,
that's why people have moved from currency to crypto, from stocks to crypto.
Yeah,
it's probably almost over.
You know, I'm sorry,
9,000 coins, but
I just realized we have 15, 16, 17 minutes
let's
until
get ready.
Yeah, we got to get ready for the jobs report. So let's start with Ryan. Ryan, how are you feeling about today's jobs report? What are you looking at? Where do you think we're going to be? What you know, especially we're dealing predominantly in the dollar and equities right now as far as response goes. What are you looking at in particular?
Right. Well, NFP, we're looking for a bounce back in the numbers from the weather-related, strike-related stuff in October. Market pretty much 200, 220 as far as those expectations go. So we know what the market's looking for. It's looking for a positive number, a bounce back, which therefore puts the bigger price risk is if we don't quite get the bounce back the market's expecting. So another soft-ish looking number, say another sub 100K number, that will catch the market on the hop. On the other side, if we get a strong number, I think the market might not react too strongly to that because, as I say, we are expecting a bounce back. So it could be bigger than what we are thinking. So keep an eye on that. I'm more inclined that the dollar gets hit harder on a bad number than it rallies on a good number. But also look at the other components. So after the headline, we look at the unemployment rate, depending on what calendar you looking at, that's scheduled to stay unchanged at 4.1%, maybe tick up to 4.2%. Always look at the participation rate when judging the unemployment rate, because if that goes up, it can increase the unemployment rate. If it goes down, it can decrease it. Overall, I'm not, you know me, I don't tend to pick a side going in. I think the dollar's more at risk of seeing a sell-off, as I said. You were talking about it yesterday, euro dollar. It's looking like it wants to have a crack at this 106 level. So trading wise, if we get a strongish number and I see a decent dip in euro dollar, I might flip my short to a long to see if we go and take on that 106 after.
Yeah, we have a lot of, and I'm just going to show you guys if you guys haven't seen it already. I mean, whether you're looking at the euro, I mean, the euro, we've thrown the kitchen sink of shit news at the euro and the eurozone literally for the last several months, and it will not go down. I'm not saying it won't go down and it won't ever go down, because I'm absolutely 100% licking my chops to be the short the euro. But as K-Man and myself have been discussing quite a bit, end of year flows might have a big part to play, along with the central banks in 2 weeks, especially the Fed. Then you got CPI next week. You know, look at the euro. I mean, we're fighting right into a neckline resistance, and then you got, you know, sterling is already trying to break out. Then you got the dollar Swiss is already broken down in a head and shoulder pattern. So when all this it's like a domino effect as they start to hit. The commodity currencies like the Kiwi haven't really played out yet, but we're in this descending channel, like in the Kiwi. I mean, you know, all you need is for a couple more of these to start triggering, and next thing you know, you got a broad-based dollar move across the board. So you're right. I think that the dollar is looking a little vulnerable, and any number that is not beyond expectations could really be sold. Now, I was listening to the Flow Show this morning, Ryan, as I was walking my few miles this morning at 3 o'clock in the morning. I heard you say that you were now thinking that, you know, you'd been in the dollar bull camp. You tend to trade with the trends, you know, quite frequently, and the dollar has obviously been bullish as of late. But it seems like you might be looking to sell dollars on any rally now. That's what you were saying on the Flow Show, anyway.
Yeah, just in the short term. You know, my longer term view hasn't changed. I'll be happy to build up a short position in euro dollar, purely on the fact that Europe's screwed and they're probably going to have to take rates lower than they expect or want. But that's something that's, you know, going to be happening into next year. For now, I can certainly, the way the price action is, as you were saying yesterday, I can certainly see a case where the euro might be wanting to have a little walk higher, and this data might be the cause of it.
Awesome. Hey, I since we're running low on time and I see that Greg is here, Steve is here, let me jump over to K-Man really quick. K-Man, so what are your thoughts going into this jobs report? What are you looking for, and what are you really focused on?
I think, looking at the time of year and ahead of central banks, that we are going to need smaller variations this time, and I'm especially looking myself at the unemployment rate to get a bit of a bigger move. Yeah, and this cable is really the one that I'm very focused on, because I think if we get a lower number and perhaps a 4.3 or so on the unemployment rate, cable could really start its year-end rally. That's what I was saying on the Flow Show. Two, I'm very disappointed, as Ryan also says on the on our chat box here. Not our Ryan, but Ryan Varghese. Quite disappointed with the antipodians. Especially the Aussie, it looks weak. They both look extremely weak versus euro, sterling, and things. So maybe we are going to need a really bad one for them to go higher. But if we get a good one, those are at risk of going for some stops first on the low side, I think.
I mean, look at this breakout. I mean, this is huge, and I've been trying to buy these all week, and look at the Euro Aussie. I mean, just screaming higher, right?
Yeah, sterling and the euro are really the ones that are now standing out. Swiss as well, and again, I'm just going to repeat what I said already a couple of times. I just cannot unsee this year end that we had in 2023. So I think this, if it would be a weak print, and maybe year end can start today, but we always need to look at both sides. So I did hedge a little of my dollar shorts through the euro. So I think if it's a really good number, euro at least will have a pretty decent test lower first, and then we'll see.
You're always bearish the euro, but rightfully so. But let's hear from some Europeans right now. Steve, good morning. How are you?
Good morning, mate.
TGIF, and I noticed we didn't see your pretty face today, and your extreme weight loss from extreme exercising that you've been doing. So, there you are. Good morning, Steve.
There I am.
So, as a European, how are you feeling about this euro right now? It looks pretty perky, doesn't it?
We've, in general, the dollar has receded a little bit during the past couple of weeks. I don't see something to write home about yet. I mean, corrections in any trend are absolutely to be expected, right? Having said that, we have now reached the first important level of support for the DXY, which is a confluence of supports roughly at 105.80, where we more or less are at the moment. So we break through that, and then yes, we can see further appreciation for the euro. Nevertheless, I would need to see a lot more to judge that this is anything more than a corrective rebound. So for the time being, I don't see any major change. I think the trends remain the same. We're just in some kind of a correction consolidation phase. Perhaps ahead of the end of year flows as well.
Steve, is it a little too ambitious? You're right on target with the top and the yen to expect a rebound up towards 52, 53. It doesn't really seem. We had that one pop, about 200 pips. And
wait a second. So we're talking now about a rebound in USD yen, right?
Yeah.
I mean, the yen has recovered a little bit from its lows. And yes, we can definitely see a little bit more of a rebound. The area I would be looking for initially to find resistance again is 151.70. So that's where I would be looking towards sellers to step in again.
Okay, 52-ish in there. Okay.
Yeah, I mean, Dale, you know how we always talk about like I think the dollar yen's probably going to be one of the easier vehicles directionally to trade, even though I'm probably not going to trade it today. I think, whether it's a beat or a miss, or, you'll notice the dollar yen, I think, is right in the middle. We've been talking about this for the last 24 hours. We're smack dab in the middle of the range. So we're probably going to challenge either the range highs on a good number. On a weak number, we're going to challenge the range lows. And I think that's, you can see how we're just smack dab in the middle right now. Right. Yeah. And so
longer term, I didn't let go of my core, because I think we're going to 140. And then if we ever take out 140, that's a massive, huge, almost panic signal. I think there'll be problems with the carry trade if that happens. I think.
What do you say about that, Key Man? And by the way, we got to make this short because Greg is here too. So
real quick, let's go. What do you think about 140? About the longer term in yen. Let Greg do his thing.
Greg just has to just sit there and
be pretty.
Well, he is the best. He is the best looking out of all of us. So.
Ladies in face, who wants an 8x10 autographed picture of Gregor Horvat? He's hiding under his name.
Greg, hey, let's bring him in. Sorry, guys, we got to bring him in. Dale did it. All right, so Greg, let's take a look at some of your waves and what you're looking at, and just so everybody knows, Greg, he uploads his charts to Forex Analytix, so you can get his wave counts on 30 different instruments, not just currencies. We talk about Bitcoin and S&P and boons and you name it. But Greg, good morning, happy Friday. What are you seeing here before NFP?
Yeah, I just posted one chart on to our chat room about the dollar. I think that we are at a very important level right now. It could be very pivotal day, I should say, because if data will be strong today, I just think that we will have another, but possibly final push to the upside till end of December on the dollar. I think that 108.50 is a very strong, serious resistance. But if we start breaking below the trend line support that is connected right now from October of 2023 highs.
Yeah, that's the one I'm looking at as well, Grega.
Yeah, so this trend line today, I think it's very important. If we get the rebound, I could be looking even for more shorts on the euro dollar next week. But if we fall through it and even make an overlap with 104.65, then I think that we have a major top in place and that much more weakness could be seen. So for today, I'm just sitting on the sideline. I just think that maybe if suddenly we really see dollar rebound, we know what to trade next week. If dollar would sell off through that 104.65, then I would assume that yields would come to the downside and dollar yen will fall even lower, and then watch yen crosses, which obviously are looking very weak, and in my opinion, they won't stop.
When's it going to have impact on the stock market, Gregor? The yen cross is failing here. Eventually, don't you think that it's setting up for the carry trade 2.0?
Yeah, I just
problems in markets.
Yeah, I mean, if we consider how strong Japanese yen is already now, if stocks come down, I just think that they will just explode even higher. I think that this current cycle of strong Japanese yen could continue until Bank of Japan really finally makes a new decision and they lift rates once more. So I think that there's a plenty of time to make money with Japanese yen. And if we see some rallies in the near term, I just think that there could be opportunities on the short side. And if you look at S&P 500 in particular, despite some higher prices, I really do not see this bullish momentum picking up. Prices somehow they are struggling at these levels when I look at the price action itself.
We almost got to 61, which was bandied about and braced universally because that was a target off the 4,800 breakout. So, 48.35 and then 1,300 on top of 48.
Yeah, and
61.
Maybe we also have to consider, like Steve said earlier, portfolio adjustment for the end of the year. This could definitely impact the stock price, especially if we consider that we had some pretty nice runs up so far this year. So definitely
more than pretty nice, actually.
Yeah, so 30% on the year for
historic.
Yeah, so some would want to obviously book profits, collect profits, and I think that this could have some impact on the stock prices. Like we may experience some setbacks.
Do you like the bonds?
Early January.
Do you like the bonds, Gregor? I'm just rushing you because we only have 3 minutes. The bonds, the weekly looks great on TLT.
Yeah, I mean, not really convinced here just yet. I think that there can be maybe room for some more extensions, but next year could be some interesting new cycles, I believe. But based on the price action I see, I just not really convinced that's it.
Okay. Thank you.
Hey guys, let's not forget we do have Canadian jobs today. That's on top of U.S. jobs. I do have to mention that the dollar CAD has not been. I mean, it's been really consolidating above 140. It's obviously getting a lift right now, meaning the Canadians selling off right now. But I think a lot of that is the Euro CAD that's just taken off like a bat out of hell. But that's going to be a big piece of data that we're waiting on as well. So thanks, Grega, and appreciate you and Steve and obviously Ryan and K-Man and Dale, all your comments. We have about a minute. Real quick, around the horn. One thing you're looking at, I'm looking at Euro 106. We start getting above 106, it starts tripping some twitchy short Euro shorts, starts tripping some of their stops. Ryan, what do you think? One thing.
Buying a Euro dip.
Okay. K-Man?
Cable.
All right. Cable looks firm. Steve, anything?
Definitely paying attention to the dollar here, as I said before, and Greg confirmed as well.
All right. Dale?
Stay short yen and hoping to sell more.
You mean short dollar yen?
Yes, U.S. dollar yen.
Long yen. Okay, long yen, short dollar yen.
Yeah.
All right. Some people don't understand the teeter-totter. Grega?
106.10.20 resistance for euro dollar.
Okay. Big resistance at 106. So now remember, guys, if the number's above 100,000 but below 200,000, that's a Goldilocks number. That's a Fed's going to stay easy. And
good.
227, bang on the money, more or less.
But look at why are we getting such a big move in the euro? What's producing?
Employment rate ticked up to 4.2%.
That's it. You're right.
That's with the participation rate coming down. So that was a bit of a negative. But
the market likes it.
But all in all, the numbers are not, something that you would expect to have a lasting effect. I mean, they are, very close to expectations.
Yeah. Did you guys see that Canadian jobs data? I mean, look at the unemployment rate, though. Whoa.
That's a hell of a candle in 10-year bonds. There must be a lack of liquidity there. That's unbelievable for all of these.
I mean, it's pretty wild. Stocks are ripping right now, guys, just flying.
I don't see that as dollar negative. It looks
for a change, because usually stocks are so weak.
It looks like the market wanted to have a go at that 106, like we were just saying before. It was in the crosshairs.
Yeah.
It's a bounce back. It's a bounce back from that weather strike-related low number, but obviously it's not good enough.
Yeah, and I'm sitting here. I haven't added to any of my dollar shorts, and I don't think I want to right now. No. I don't mind being short the dollar here, but I don't know if I really want to start adding. I don't know. What are you guys thinking at this point?
No. This is not this is a jobs report where exactly as it says, it's still a Goldilocks report. No. I wouldn't add to short dollars right now either,
unless it's dollar max.
Yeah, wouldn't it be that we're December, and that's what worries me. I'm not going to buy dollars either. No.
Yeah, I mean, look at dollar max right now. It is about ready to absolutely crap the bed, in my opinion. And I'm not short. I don't have a position here, but the Goldilocks number, rallying stocks, carry trade a little bit, buy Mexican pesos. Trump's not going to be that hard on. Holy shit! There goes the dollar. Trump's not going to be so hard on Mexico. They're going to participate in immigration and crack down on drugs. And I think the Mexican peso could rip. Meaning
suddenly everybody is in the mood to collaborate, huh?
Yeah, I think so. I think everybody's gonna be like, I don't want to mess with Trump, so I'm gonna do whatever he says. And I think the dollar max trades back to 1850, about this 200 DMA. I'm not short. I'm just saying I want to be short. I'm just not short yet. So
I am.
Oh, well then, hey man, I think we're going to 1850. So there you go.
The yen has really given up the ghost. I don't think we're going to see 52, 53. I think that 200 point pop was it this week. It's in trouble, this yen. I'm telling you.
Yeah, hey, dude, I don't disagree. Hey guys, just so you know, this is the Forex Analytics chat room. I'm going to take you over to the trades room. If you guys want to know what like K-Man's doing, you want to know what Ryan's doing, you want to know like what positions I'm carrying, because I just keep my open positions on the board. My positions haven't changed since yesterday, so you can see them all right here on what positions I'm in, and everybody else that's trading in our chat room too, and have an idea of what other traders are doing. Be in the Forex Analytics chat room. It literally is the most active, closed off, private community you're going to find, and we talk all day long about the markets and silly Netflix shows when we're in between Christmas and New Year's, and that's pretty much it. I mean, that's what we discuss. It's just a great place for you guys to be. All right, Dale, I know you do not have an interview, so let me go around the horn, get people's last minute thoughts before we close it up for the weekend. So let's start with you, Ryan. Since you kicked us off for the Flow Show, what are you thinking as we saw this data?
I'm thinking I'm glad I folded the rest of my short a minute before the data dropped in euro dollar, but didn't get the dip. I'm not going to chase this higher, this move in euro dollar. I don't see that as bad data at all. It's as we've been going on for the last few months. We're back to normal, but the market obviously wanted to hit that 106 level and take it out, and that's what it's done. Now, can it hold it? That's going to be the question. If we close above 106, 10, 11 for the week, that puts a slightly different complexion on things.
We're not done with data yet today. We still have University of Michigan consumer sentiment and inflation expectations, and we even have Canadian IV PMI. So which was delayed from yesterday. So Ryan, do you think any of that's going to affect the market today?
Yeah, it could do. It could just add to what we're seeing now. So if we get a real soft one in the Michigan sentiment, and it's the flash number, so it's the more important release, then yeah, that could give this dollar cent an extra kick. Keep an eye on 10-year yields. We just ticked down to 4.13, back at 4.17, but we're holding below that 4.20 level, and that's another important number to watch for closing off the week.
Private Madness. I just put the Flow Show link into the Zoom. So this way, when you're listening to the Flow Show, you can listen on Twitter or you can listen on YouTube, and you can listen to Ryan and K-Man. But if you listen via Zoom, you can actually interact with these guys. You can actually send them questions and whatnot. So sorry, Ryan, I had to jump in there and give it to them. Cool. All right, Ryan, thank you for your thoughts. K-Man, speaking of Flow Show, Ryan's partner in madness over there. What are you thinking today after today's data? Do you chase this move lower in the dollar? Do you add to euro short or euro longs and really stick it to those shorts? What are you going to do here?
You know what? I just added slightly on the cable, but in fact, it increases my euro sterling position because I'm still like as a hedge I'm a little short euro dollar. So but I still like the cable. This is technically and it just goes with my view. And don't forget that last year, and I just want to close on this. Don't forget that last year, the year end kicked off on the 5th or 6th of October with a good NFP report. And the dollar got absolutely hammered into year end. So sometimes the fundamentals are what they are, but a little bit pushed aside. And I think there is a risk here. That is what I'm still thinking.
Because the flows are the flows, and that you can't.
Yeah, they have to do them.
Right. All right. Hey, K-Man, I want to ask you this because you might have a little bit better flavor on this, which I'm not short. I kind of want to be. This US dollar Norwegian krona is really struggling above 11. We're above 11 right now. And if the euro is going to make a move, let's just say to 107, doesn't this look like a natural setup short? And what do we have in front of us with the Norges Central Bank over the course of the next, couple weeks? You're muted, K-Man.
Yeah, so the Norges Bank is on the 19th. They are still on a path to lower rates, but I'm not sure if they do anything this month. I'm struggling to find too many reasons to buy the Norwegian kroner. If you look at its cousin, the Swedish kroner is doing better, and the Swedish kroner will also be more correlated with the euro. So I don't know. Dollar Stocky looks a bit weaker than Dollar Norway's for the time being, and the oils can't keep a beat. So I don't know whether it's justified to go and look for lower Dollar Norway, but on the Dollar Norway there is these levels around 11.10, 11.20, and they are capping the debates for now. So I mean, could be a decent trade. But I'm worried about what's happening on the oils and yeah.
Okay. All right. Very good. Thank you very much. Let's talk to Steve. Steve, last minute thoughts before we wrap things up here on the Morning Edge. How you feeling about everything you're seeing? Because that dollar index did break down as you expected.
The dollar index is breaking down as we speak. It is below the channel we were talking about. It is below the 105.70, 105.80 level. But I'm going to say what I usually say. I know it's boring. This is not the end of the day yet.
Yeah.
Right.
True.
And coincidentally or not, the end of the day today is not just the end of the day, it's the end of the week. So I think the smartest thing for somebody to do is wait for the day and week to close, see if indeed we're going to confirm such a move, and then we can plan the week ahead with perhaps, if confirmed by Sunday's open, with some downside targets for the dollar and upside targets, of course, for everything else against the dollar. Now, as an added note, we've seen lately that the metals have not really been responding to what the dollar is doing. Right? Gold is a good example, a prime example of that.
Yep.
Yes, it has turned higher from the lows of the day to day, but in general, for example, gold mostly, and then the rest of the metals as well in a little bit of a different way, have been consolidating despite what the dollar is doing. So I'm definitely paying close attention to the metals as well.
All right.
Especially if we don't see metals recovering with a dollar pullback, if that's confirmed, I think that shows that in the short term, we are in a state of weakness.
Economic weakness.
And they remain vulnerable in the very short term.
All right. Fair enough. All right. Well, thank you, Steve, for your update on gold.
My pleasure.
And Dale, I'm coming to you last. Grega, what are your thoughts here as you've seen the data come out?
Well, I still see euro dollar somehow it's struggling right here around 106.20, 106.30. That was some resistance from November 20. So I just think that that's not fully confirmed that we are turning up here on the euro. I just still think that if we slow down, as Steve said, and maybe even close a bit lower from current levels by the end of the day, I just still think that euro could experience further weakness next week.
Okay, so basically you're saying watch the close today. It's going to be really important. Okay, all right.
And 104.65 on dollar index, as I said earlier.
104.65. All right, very good. And those are pretty important levels. Make sure you guys write them down, especially if you guys are, all you ladies are Grega Horvat fans. Make sure you're writing that number down. Very good. Thank you.
Yeah, actually, I talked about this in quite in detail in this week ahead video, and I covered what we have to see to call a dollar top. So.
Awesome. And thank you, Grega, for once again for jumping in and doing that in my behalf since I was in San Diego this last weekend. So appreciate it. Really do.
You globetrotter.
Dale, let's hear from you before I give my final thoughts and we wrap up for the day. So Dale, what are your thoughts here? Because the dollar yen, you're not constructive on it, and it is rolling over. So
I'm looking for 120 yen next year.
Oh shit! We went from 140 to 120.
Well, under 140, under 140, I'm looking for it to, make a stand at 140, but eventually I think 140 will give way, and that's a target, 120 in the end next year.
Look, you know, Dale.
That's my campaign trade for 2025.
What's funny about what you're saying is I don't think it's something that's crazy. You look at the Trump administration, you try to figure out how are they going to engineer a weaker dollar and do the things that they want to do, right? And build the manufacturing.
They don't know.
No, but I think the risk is there's some sort of, and this is the risk of being long dollars into 2025. I think there could be some sort of, you could call it a Plaza Accord too, some sort of a mass agreement where, like, look, we're not going to tariff you. We're going to reprice the dollar by 15% lower, but we'll agree that we'll buy this. You have to, in a big negotiated deal to weaken the dollar. I think there's a small chance of that. And that's one of those things that, you get up in the morning, one day and you look around and you're like, holy crap, the euro is trading at 120 right now. How did that happen? And it was just trading at 110 yesterday. That's the type of thing that I think is a big risk for dollar bulls. It's a small risk, but
yes,
bigger than it's ever been.
Percentage-wise, that is a small risk, especially
it's still
such a
crowded.
big move.
It's still crowded. I believe the end trade to the long side, they had that big rally. We thought we'd only get to 52. We got to almost 57. They had a chance to reload and take care of their positions if they were caught off guard. And now they're loaded up, ready to go to take it back down to 140 and then break down.
Yeah, I mean, hey, we could.
But there is something. One last thing I want to leave with people.
Yeah.
Natural gas. It's a season. Plus, it's a very unusual COT setup. Normally, you have retail long. Am I funny today? Retail long.
I was saying natural gas, and I was just thinking about
Oh,
pulling your finger. I thought it's in
okay.
season. Well, maybe you ate
some
chili
bacon
last night, Dale.
I had Italian sausage, but anyway, commercials are huge longs, and they're usually short. That's why they call it the widowmaker. And retail is usually huge longs, bottom picking, and it's the opposite right now. You have retails very short, commercials very long. We had a nice move, and we're getting a pullback here. There's fuel for higher prices with all the shorts in there. So keep an eye on that. I think we're going to be much higher in natural gas next year.
Well, it looks like we're making higher highs and higher lows. So.
Yeah, send some to Ryan too. They'll need some over there.
I think Ryan's got plenty of natural gas.
Speaking about markets, I think that we need to keep an eye on crude as well. Because crude is also in the precipice of a potential bearish breakdown. Yeah,
62. Exactly. I'm looking 62.
We break through 667, which we are getting very, very close to at the moment.
Yeah.
And the next target is the September low at 65. But after that, we should be looking towards 62. 62.80.
Give it to me.
Okay.
All right. 62-ish.
Okay.
You ever use that, Grega-ish? It would give you an area instead of saying, given the range, just give a number with ish at the end of it. Try it.
Give me a quote I can drive a bus through.
I tell you that. Buy them.
Oh.
All right. Well, listen.
So real quick, Blake. Since I want to give my ideas. Can I do that real quick?
Oh, nobody wants to hear your ideas.
All right. No, I do agree with Grega. This 106 level is a big one, and what everybody's been talking about. I think 106.
You're probably short 50 already.
Above, below. No, I'm not actually. I'm still long euros from this week, but I am. My full size position is pound, but that's from 110 pips ago, and actually is about 150 pips ago because I've already added to my trade yesterday, and I think this one is really going to see 130. And if you look at sterling on the crosses, pound Aussie, pound Kiwi, they all look really, really good. So I plan on, adding to this on any significant dip, which we might see here, following this data. But anyway, I think sterling looks really constructive, and there's been a lot of sterling bears out there, hasn't there, Ryan?
Oh, there's always sterling bears. There's more sterling bears than US stock market bears. I'll tell you, it's terrible.
They were all spawned by
I think
George.
That's almost impossible, given how many people are trying to fade for the past decades. The US stock market.
By George Soros.
There's more sterling bears than brown bears. That's for sure.
Yeah. Well. I think sterling has the opportunity to really, trade up towards 130. If you look at it from a measured move, it'll take us probably.
Try and find a stock market bear now. They are hiding out.
They're lurking. They're lurking. 2025.
Harry Dent said, "If the market doesn't crash by June, I'm resigning. I don't have to write this newsletter. It better crash by the end of June. I heard him ranting in an interview. It did not crash by the end of June. So he still has rants, and, you know, he can retire. And you know what? I don't know if people would miss him that. Anyway, you know, I mean, he said he'd retire if it didn't crash. All right,
there's a lot of market pundits that will,
market's reversing, AJ. Yeah. Remember Rebel Yell by Ben Maldonado yesterday. All right, put on your. I don't know. I didn't know that Ben was from the South, but he has a Rebel Yell. So everyone have a great weekend. Really good seeing you guys.
Great seeing you
as well.
We should
do this.
As always, it's nice being here.
You just have to give me some heads up so I can primp my hair.
You look great, and Ryan's in his jacket. K-Man.
I've been doing all the numbers. I've been doing all the numbers when Blake was talking.
Gregor dropped in. It was great. So everyone have a great weekend. These are the people that are working hard for you. You want to say thank you, join the community, and help yourself. You'll be saying, a lot of people say thank you to us. So, you know, you're interested in becoming part of the community, you found the place. And have a great weekend. Don't just count your pips, count your blessings. Dream Team, nice seeing my Trading Warrior brothers today. Hope you guys did okay on this NFP. It's only one day. Don't get elated and do cartwheels if you were right, and don't go fetal if you were wrong. You want to get to just another trade. And I'll see everyone Monday. Take it easy, team.
Bye-bye, Dale. Thank you for tolerating us.
Bye, I love you guys. So love is acceptance. Okay, so that, you know, if you love someone, you tolerate them because you accept them for who they are. That's really love, accepting. So I accept you, Steve. True. Right?
Oh, you accept Steve? Damn, that's a big ask. Big
ask. I accept Steve. It's a big step in my life.
That's easy to do. I'm tough, but I have an appealing personality, right?
You do. You have a good heart. All right. So everyone, have a great weekend. We'll see you Monday. World's here, and we're going to have a great 2026. Right?
We'll go on holiday.
Are we skipping a year?
Yeah, it's okay. You can sleep over a little bit on the 31st of December.
All right. Goodbye, guys. Take it easy. Thank you, everyone.
Bye-bye.
Do your homework. Join up and navigate the site on the weekend.
See you on the morning ads if you are a Forex Analytics subscriber.
I will see you there in about 20 minutes.
All right, guys. All right. Adios. Good